Japan's narrow growth tests fiscal, monetary policy paths. February 17, 2026. The Japanese economy narrowly returned to growth in the final quarter of 2025, largely defying the U.S. tariff hit and giving the central bank room to keep raising rates. The modest expansion comes as welcome news for policymakers, who have been working to revive an economy emerging from decades of stagnation. But some economists say the rebound was so tepid that it could justify Prime Minister Sanai Takaichi's pursuit of more aggressive government spending. On a quarterly basis, real gross domestic product expanded 0.1% in the October-December period, reversing a 0.7% contraction in the previous quarter, preliminary government data showed Monday. That was lower than the 0.4% rise economists had expected. In annualized terms, the economy grew 0.2%. The economy continues to recover moderately. Looking ahead, the effects of various policies and improvement in the employment and income situation will likely support moderate growth, said Minoru Kiuchi, Japan's economy minister, in a statement Monday. The results suggest that Japan has weathered the blow from U.S. tariffs. Exports fell 0.3%, a much smaller decline than the 1.4% drop recorded in the previous quarter. On the domestic front, capital investment edged up 0.2% from the previous quarter, improving from the 0.3% drop in the July-September period. The economic recovery is likely to reinforce the Bank of Japan's confidence in the domestic cycle despite a volatile global environment, keeping the door open for the central bank to tighten monetary conditions further. Policymakers are now closely watching the results of annual spring wage negotiations to check whether income growth is catching up with price rises. Companies have made efforts to offer generous pay raises in recent years, but private spending has remained soft amid higher prices. Monday's data showed that private consumption increased 0.1%. Economists said the October-December expansion lacked vigor, making it easier for Takaichi, who now has a powerful mandate after a sweeping election victory earlier this month, to pursue expansionary policies. The government is considering suspending the sales tax on food and beverages for 2 years. Sluggish economic activity increases the chances that Takaichi will not only press ahead with suspending the sales tax on food but enact a supplementary budget during the first half of the fiscal year that starts in April, rather than wait until the end of this year, said capital economics economist Marcel Feliant. While that may complicate the BOJ's efforts to manage inflation, Stefan Ongrich of Moody's Analytics said the central bank is expected to raise interest rates in July. Still, subsequent increases will be hard to justify if growth data fails to show greater improvements, he said. The BOJ has kept its policy rate at a 3-decade high of 0.75% since its last hike in December. By the Wall Street Journal, story by Megumi Fujikawa, February 17, 2026.